Today is 8th. Okay, what they are saying is, they are saying that the question follows from the test you are understanding, the previous one. Okay, prepare extracts of financial statement in respect to the lease agreement for the year ended 31st December 2000. They are asking about the financial statements. Okay, when they are talking about the financial statement, same thing. We have to do with respect to the profit and loss account, and we have to do with respect to statement of financial position. Okay, when we are talking about the statement of financial position, what's happening? The first one is we have what we have done in the previous case. Okay, what we have done in the previous case, we have done only we have calculated only what is the present value. Okay, we have calculated what is the liability that has been recorded in the this one. Is that, see, actually if you take the things, see, they will not give this much lengthy question they will not give, but if you take into consideration, this is going to be what? This is going to be step 1. How much you have calculated depreciation? How much you have calculated depreciation? What they are saying, see the thing. They are saying that it should be for the year 31st December 2001. Okay, 31st December 2001. Now, when they have started, little bit we have to go to the previous question. Okay, little bit we have to go to the test your understanding 1. Okay, test your understanding 1. They have in the test your understanding, they say that it is going to be how much? There is a 2-year lease. There is a 2-year lease we have done, and what is the value of the asset? The 2 years lease is then it has been extended for 1 more year. Is that it has been extended for 1 more year. 1 minute. How much is the opening balance of the lease liability? 31,552. Is that 31,552? Okay, 31,552. See the thing. 31,552 plus there was a cost is there. How much is the cost? Direct cost. Direct cost is 3,000. Means the total cost is how much? Total cost is 34,552. 34,552. Depreciation is for how many years? 3 years. Is it a depreciation? I am just explaining that, and subsequently I will take this into consideration. Is that if you take depreciation 34,552 divided by 3 years, how much you will get? How much you will get?
11,517.
570. Okay. 11,517 is the depreciation for the first year. Okay. Depreciation for the first year. They are asking us what? They are asking for the statement of financial position for the year 31st December 2001 for 1 year. Okay. Now, first what you have to do? First what we have to do? We will calculate it. Okay. But first what we will do is that for a minute. First what we will do is we will calculate depreciation. Is it right? Depreciation for the year ended. For the year ended. This is solution. This is solution for test your understanding 2. This is the solution for test your understanding 2. The step 1 is a depreciation for the end. See, I will say the initial value is 31,550. 31,550. How much we got it? 31,551. Okay, 31,551 plus direct cost. But the direct cost is how much? 3,000. Total cost is a total cost is how much? 34,551. Is it? Depreciation is a year ended. YE means year ended 31st December 2001. Okay, 31st December 2001 is 34,551 divided by 3 years. How much we'll get? How much we have calculated? 11,517. Are you clear about this?
Okay.
Is it okay? Next. Are you clear about this?
Yes.
Okay, step 2. See what they say, that's very important. In the in the test your understanding, is it right? In the test your understanding, they say that whether it has been paid in arrears or it has been paid in advance.
Advance.
Okay, if it is paid made in advance, is it right? 1 minute, 1 minute, dear. 1 minute. Yes. Sorry, Salim and Mazin. Please. Hussein. Sorry, so sorry.
It's alright.
Okay, so sorry. Somebody came. Yes, okay. Now where we are? We have now. We have done that. This is the first step. For the first step we have done. See, actually we have to calculate the initial value. Then once we have calculated the initial value, then we have to calculate the depreciation. We have calculated the depreciation. Now what we have to do? We have to take into consideration what are the payments. Okay, what are the how lease payments has been done. When we are talking about the lease payments, what is the structure they have said? They say that, is that what is the beginning value? The beginning, they are saying, see, listen, year, opening balance, interest. Interest is nothing but the effective rate, okay? Interest is nothing but the effective rate. How much we have paid? We are paying interest at the rate of how much? 5%. And here little bit change, payments, is it? And you will have the closing balance. Okay, you have the closing balance. What is the column 1, column 2, column 3, column 4, column 5 is 2 plus 3 minus 4. The first time we are doing little bit we have to understand how that is. Okay, now it is when they are working on 31st/12/2001. Is that 31st/12/2001? They say that how much is the opening balance? How much you have to take? Opening balance, how much you have to take? Lease payments.
Lease payments. Okay.
How much you have to?
From the previous question?
Yes, from the previous question, I will write for your understanding. Is that refer? Is that refer? Refer step 1. Is it right? Refer step 1. How much you have done? We have calculated
10,000.
how much? How much?
10,000.
No.
10,000.
10,000 is the payment, my dear. Is it 10,000 is the payment? How much is the opening value? 31,551.
505.
Okay.
Present value, right?
Yes, initial value. Okay. Initial value. I will write initial value. Okay. Initial value. How much? 31. On that, how much is the interest?
5%.
5%. Calculate. If you are, see, if you are not writing, do it on Excel. If you are not writing, do it on Excel. Okay. How much is the 31,000?
30,000.
How much?
30,048.
No, 31,551 times 5%.
Yeah.
1577.
1577.
Right?
Huh?
You will take present value, right?
Yeah.
Thir-
31551.
31,551 times 5%. Is it right? I will write column 2 times 5%. How much is the, see, how much is the lease payments we have to pay? We have to pay lease payments of 31,557. Is it right? 31,557. Now 31,557, on that, how much you have to, they will calculate interest. Is it right? How much they are calculating interest? They calculate interest at the rate of 7%. 5%. Are you okay, Hussein?
Yeah.
Okay. How much you are paying lease payment? You are paying a lease payment of 10,000. How much is the closing balance? 2 plus 3 minus 4.
28,128.
2.
23,000.
Okay. 128. Don't worry about the totals. Okay. Now 31/12/2002. Keep it in mind, non-current liabilities and current liabilities. That is the only one thing which you should be very careful. Is that 23,128? Okay. How much is the interest at the rate of 5%?
1,156.
1,156. How much you are paying lease payment second year?
1,000. 10,000.
10,000. 2 plus 3 minus 4.
40,208.
Huh?
40,000.
Huh?
208.
284.
84.
Is it? See the things. Now, we can do for the last year also. Okay? We can do for the last year also. I am just doing for your understanding. That's all. Okay? I am reading. Okay? I am putting one line here. 31/12/2003. Is it 14,284? Is it at the rate of 5%? How much?
742.
740? 740?
42.
No. Okay. And how much you are paying lease payment fifth year, third year?
Full amount.
No, 15,000.
Okay.
How much you are paying in the lease year? Is it? And what will happen at the end of the third year? You will not have any balance.
There's balance, but
Yeah, how
Okay,
much is
sir.
there? For 2 plus 3
sir.
minus 4.
Doctor, the 742 is wrong.
How much is there?
714.
7.
714.
No problem. No problem.
Yeah.
No problem. 714. How much is there you will get total? We will get marginal difference. Rounding out difference we will get. That's all.
negative 2
Mine-
we get.
Huh?
Minus 2000, right?
No?
2 only.
Only 2 na?
Yeah.
Oh, that's a minor difference, is it? That is a minor difference. Don't talk about it. This is the rounding off. Okay? This is the rounding off. Okay? That is, don't worry about that. Actually, we are not supposed to do this. Okay? We are not supposed to do this. But for your understanding, I am telling you that how it is. Now, which one is non-current liability and which one is current liability?
23128 non-current liability.
Good.
14284 current liability.
Because this is why current liability we are going to pay in the next 12
Next
months
12 months.
after reporting period.
Yes.
Okay, after report you memorize this one. After reporting period we are going to pay for the next 12 months. Okay, for the next 12 months. Are you clear about this? This is what it says. Now, what they are asking us, are you clear about this? Both of you?
Yeah.
Fine.
Yes, doctor.
Fine. Okay. Next. What we are doing? We are talking in terms of profit and loss account. Okay. Profit and loss account. Okay. Profit and loss account. Profit and loss account. Extract only. Okay. Extract only. What we have to show in the extract? What we have to show? This is for which year we are doing? We are doing for 31/12/2001. Okay, 31/12. What are the expenses we have to show in 31/12/2001 in the profit and loss account? Please tell.
Lease.
Depreciation. Is it right? Depreciation. Fine. How much is the depreciation we have calculated?
Oh, Uh, 11517.
11517. Okay, next, what we have to show?
Interest rate.
Pardon?
Interest.
Yeah, finance cost. Finance cost. How much we are paying finance cost in the year 31st December? Finance cost we are paying 1577. Okay, 1577. That much only we have to show. Is it right? That much only we have to show. The second part is we have to show statement of profit, statement of financial position.
Position.
Okay, in statement of financial position, first you have to show non-current assets.
Current liability.
Is it right? Non-current assets. Non-current assets. Now you understand. We have taken it on lease. When we have taken it as lease, we have to show it what? Right of use. Is it right of use of asset? Is it 1 year we have used it? Okay, 1 year used it. In the opening balance is how much I will write? Opening balance is 31,551 plus 3,000. Is it total value 34,551? Okay, 30 including direct cost. How much you have paid? How much is the depreciation we have in the first year? 11517.
7.
Okay, 11517. How much is the difference you will get?
Twenty.
Assalamu alaikum Sumayya, how are you? Sorry, I didn't notice you. Yeah, tell me.
23034.
23034. Okay. Now, any doubt anywhere, just you ask me. Okay, that's very important. Next, non-current liabilities. You can write like that. Nothing will happen. Okay, nothing will happen. We have done non-current liabilities. Lease is there. Is it lease? How much we have shown lease in the non-current liability? 23,128. Okay, 23,128. Whereas in the current liabilities, how much we have shown lease?
14284.
Okay, how much we have shown in the lease?
14284.
No. How much is the current non-current liabilities? 23,000.
128.
23,128. 23,128. One minute. 23,128 minus 14,284. How much you will get? How much you will get?
Which figures? 20.
How much you will get? $23,128. Okay, 23,128 minus 14,284. 1 minute. 23,128 is a total liability. Okay, 23,128 is a total liability. On this, how much you are going to say? The balance is 14,284. $14,284. Next month, next year, how much you are paying? Next month, how much you are paying? Just check 23,128 minus 14,284. Just make sure how much you are going to get. 23,128. 1 minute. 1 minute. I'm just erasing that one. Okay. 23,000. Difference is how much you are getting?
8,750.
8,750. No, 8,000, not 8,750. 23,128 minus 14,284. How much you will get difference?
8,844.
44. Eight, 844. See the things. I'm just going 34,000. Is it right? 34,551 minus no. Okay. 31,551. This is the total lease liability. Is it right? This is the total lease liability. First year, how much we have paid? First year we have paid 31,551 minus 23. Is that just as a 31,551 minus 23,128. Okay, how much we have paid? We have paid 8,423. Okay, we have paid how much? 8,423. One minute. Just I want to make sure this one. Okay. See the thing. On the statement of profit financial position, the total liability in the year 1 is split between non-current and current elements. Okay. The first sentence. For payments made in advance or arrears, the non-current liability is represent the balance outstanding immediately after the payment in year 2. Okay, year 2. Now what happens? We will go by this. On the statement of finance, the total liability at the year end, at the end of year 1, total liability is how much? At the year end 1 is 23,128. Okay, 23,128. Fine. It will be split into non-current liabilities and current liabilities. For payments made in advance or arrears, the current liability, non-current liability, is represented by the balance outstanding immediately after the payment of year 2. Is that the payments made in advance is the balance outstanding. What is the balance outstanding at the end of year 2? The balance outstanding at the end of year 2 is how much? What is the difference we have taken? The difference is how much? 884.
84.
80 is that 884.
Yeah.
The what they say, the difference between the amount left after at the end of year 2. At the end of year 2. Again, I'm just keeping in mind. Okay. See, what is the non-current liability is the represented by the balance outstanding immediately after the payment in year 2. After the payment in year 2 is how much? The balance after the payment in year 2 is how much? 14,000. After the payment in year 2 is how much? 14,284. Is it right? 14,284. The difference between the total liability at the year end and the non-current liability will be the current liability. Is that what they are saying? The difference between the total liability at the year end and the non-current liability will be the current liability. Total liability is how much? Total liability is how much? How much is the total liability? The total liability is how much? 23,128. And the liability at the year end liability is how much? 14,284. Is that 23,128 minus 14,284? How much is there? Is that 23,128 minus 14,284? The difference is how much? 8,844. Is that the 8,844? Little bit more closely you have to understand. Okay, we are going with the statement. I will put the thing. I will put on the statement of the financial position. The total liability at the end of year 1 is split. We are splitting. This is at the end of year 1. Is that at the end of year 1? We are splitting this under non-current and current liabilities. Okay. Now, for payments made in advance or arrears, the non-current liability is represented by the balance outstanding. What is the balance outstanding? Immediately after year 2, this is the balance outstanding. Is it? This is the balance outstanding immediately after year 2. Is it? The difference between the total liability, this is the total liability, and the non-current liability, this is the non-current liability. The difference between the total liability and the non-current liability is the current liability. Is it right? Are you understanding how it's happening? Go by the step. I told you in the beginning, we have to be very careful. Is it right? This is the total liability, the total liability at the year 1. Okay, this is the total liability at the year 1. This is where we have taken this. Is it right? The second one is the payments in advance is represented by the balance outstanding after the payment in year 2. How much is the balance outstanding? 14,284. Is that 1484? This is the non-current liability. What is the difference between the total liability and the non-current liability will be identified as a current liability. Is it okay with you?
Yeah, doctor.
Is it? See the thing, you go by the rules, okay? You go by the rules, okay? you go by the, that's very important. Okay, this is the 1. I will put this is 1. And what is the second one? This is the 2. Is it? This is the 2 what we are doing, and this is the 3. This is the 3. First we have to take what is the balance at the end of year 1. The balance between the year 1 and the balance between year 2 is the non-current liability. Is the non-current, and the balance difference between the total liability and the non-current liability is going to be a current liability. See, again I will take this, I will take like this. Okay, I know total liability is how much? 23128. Okay, total liability is how much? 23128. How much is the at the end of, this is at the end of year 1. Okay, this is at the end of year 1. Now what is the at the end of year 2? At the end of year 2 is how much? The balance is how much? What is the balance? 14,284. This is at the end of year 2. Means you are going to pay for more than 1 year. Okay, for more than 1 year. Whatever the difference between these two, this two has to be identified as a current liability. Yes, tell me Hussein, Salim and, Hussein, Mazin and Sumayya.
It's okay, doctor.
It's okay.
New for us actually.
Yeah,
because we used to calculate it in different way.
Yeah, tell me how you will calculate. Tell me.
No, before we are calculating year wise, right?
Yes.
Current liability and
year
and,
wise.
and now this time it's little bit something new.
Yes, something new. That is the reason. Is it right?
Yeah.
I thought of writing there, but what I am doing, I am just referring, I am giving the reference with respect to the rules, and I am explaining it against the rules. Okay, I'm taking the rules and I am explaining. Otherwise you will say that from where we got it.
Yeah.
There should not be any confusion in your minds. What is given in the rules, we are following as per the rules as well. Okay, once you are going to say it's okay, it means you need some revision on that. As simple as that. That is my understanding.
Yes.
Okay,
yes.
That is my understanding. Very simple. Okay, keep it in mind. Where we come across something similar to this, we will have another look on it. Okay, we will have another look on that. Means how much is in the statement of financial position. In the statement of financial position, how much we will show as a non-current liability. We will show non-current liability. See, just keep this. Just keep this. I will put this as a circle, and I will take this in the appropriate place. Okay, in the appropriate place. In the appropriate place. Okay. Okay, in the appropriate place, here as well as here. Is it how much is there? 14,000. How much we calculate? 14,284 and 8844.
So in all cases, of lease, we have to calculate it like this.
100%.
Yes.
Is it at 100? See, follow the rules, okay? This is precisely
Yes.
as, see, we cannot, fine, we can, that is the difference between a normal calculations and the lease calculations. Okay?
Yes.
Fine. Yes, Hussein and Sumaya. It's so fine. First time I can understand. Okay, your silence speaks a lot. Of I can understand your silence. Okay, inshallah things will work. Can I go to the next one?
Second, just writing.
Huh?
Yes, I'm writing. Just
No,
one second.
no problem. No problem.
Okay, done.
Yes, Hussein.
Done.
Sumaya. Okay, fine. Okay. I can understand. I see when there is a difficulty, the moment your response, your voice, I can only sense from your voice. Very simple. Is that I can sense only from your voice. Sure. Okay, fine, no problem. I am keeping everything in noted. Short-lived and low value assets. If the lease is short term, 12 months or less, or a low value, then it is simplified treatment is allowed. In these cases, lessee can choose to recognize lease payments in profit and loss account on a straight line basis. No lease liability or right of use asset will be recognized. It is only for less than 1 year, or it is for a small amount. Then we should not do all this process. The IFRS 16 lease does not specify particular. They will not say what is the low value or what is the high value. Although the basis of conclusion indicates a value of 5,000 as a guide. They say that if it is below 5,000 it is low value, more than 5,000 it is high value. The standard also give examples, tablets, that normal computer tablets, okay, tabs, small personal computer, telephones. The assessment of whether an asset qualified is having a low value must be based on the value when it is new. It is not the used one. Therefore, a car would not qualify as a low value asset, even it is a old. Okay, just keep this in mind. It will be in section A. Okay, it will be in section A. Fine. What they are saying? They are saying that they have talking about the low values. Okay, they have mentioned this is only theoretical one. Okay, that acquires telephone for sales under 2-year lease. The term of lease requires initial payment of 2,000 less than 5,000. Is it right? Less than 5,000. Following two payments of 8,000 each on see the terms of the lease required a initial payment of 2,000 followed by two payments of 8,000 each on March and next 2 years. Show the impact of in the financial statements for 31st December 2007. See the things. When it has been happened on 1st April 2006 and they are doing on 31st December 2006. Is that 31st? Means how many months they are taking? They are taking 9 months. Okay, they are taking 9 months. What they say, it is our if lease permits simplified treatment for assets of with a lease of 12 months or less of low value, the standard does not give any definition of a low value. Okay, the simplest treatment allows the lease payments to be charged as a expense over a lease period. What they have said, 2000 plus 8000 plus 8000 divided by 2 years, a 18 plus divided by 2. Is that 18 divided by 2? And they say how much they have taken? They have taken for 9 months. Okay, 6750. The expenses in this period is not the same as the payment of 2000. We need to see what happens. Total expenses is 6750. How much they have paid in advance? 2000. Is it how much they have paid in advance? 2000. It comes to how much? 4750.
4750. Yeah.
Okay, so 4750. That's what it is. Lease is 4700 in the profit and loss account. They will say 6750, but in the accrual they say it is the 4750. Fine. Fine. It is accrual basis. Accrual basis means even you have not paid, you have to reflect how much you have. See, you have paid only 2000. Is it right? You have paid only 2000. Still you have to pay. Is it? Still it has to be paid. Now, is that this is of the low value and short lease. What is the mid-year lease, mid-year entry into lease? If the company enters lease part way through the year, middle of the year. Till now we have done academically, professionally, from examination point of view, 1st January, 31st December. But if assume you are doing in the middle of the year, the depreciation and interest will be time apportioned. Okay, 6 by 12, 8 by 12, 9 by 12, whatever. The liability table is likely to need extra columns to split the table between prepayment and post payment. Okay, that means you will have some more calculations should be needed. Okay, Sheen entered into an agreement to lease the item plant on 1st October. Is that 1st October? And they are talking in terms of what? 31st March. If you are talking from 1st October 2008 till 31st March 2009, how many months it will be? 6 months. The lease have 4 payments, 200,000 commencing on 1st October. The plant has useful life of 4 years and to be scrapped at the end of the period. The present value they have already calculated. Present value is 700. The implicit rate will be 10%, rate of interest. Okay, what they are saying, see the thing. First what they have done, they have taken the depreciation. Okay, total amount is 700 divided by 4, but what they have done, they have taken it for 6 by 12. Okay, they have done it for 6 by 12. In terms of lease payments also, in terms of they have taken interest, they have calculated 6 by 12. Just keep it in mind. In the next question we will do. In the next question we will do. They have taken the initial payment paid. Is that initial payment paid, and balance on 1st October is how much? 700 minus 200. Means when you are calculating interest, we will calculate interest on the outstanding amount only. That is the simple understanding what we should know. Okay, definitely that is by default. That is what, there is no interest charge in the first half of the first year and interest in charge of the first half of the second year. Reflect that interest on the balance at 1st October, whatever the balance is there, outstanding balance, On the outstanding balance, we calculate the interest. Okay, again, once calculated, it will be split into non-current assets and non-current current liabilities. What we have done in the previous case. Okay, what we have done in the previous case. Now you will have some more clarity on that what we are doing. Is that they have taken depreciation, finance charge, non-current asset, right of use. Is that right of use is the whatever the total outstanding minus how much we have paid in the first year. Then this is where it comes into picture. Is that this the same concept which we have applied in the previous case? That we will apply the thing. See the thing at the end of year 2. Is it right? This is 4 years lease. Okay, this is 4 years lease. 4 years lease means first, second, and third. But whatever that the end of year 2, as per the rule, it will be a non-current liability, and the difference between the opening balance is that the difference between the total liability and the difference between total liability and non-current liability is that the total liability and non-current liability is going to be identified as a current liability. Is that it's going to now you will, the moment we will do second question, then you will get more convinced what is the procedure we have adopted, because if there is a consistency, there will be a good understanding. Okay, there will be a good understanding. Fine. This is with respect to the mid-year if we are taking in the mid-year lease. Now the second one, are you clear about this before I go to the next one?
Yes, doctor, clear.
Okay, Hussein, Sumayya. Fine. Okay.
Yeah, because
Little bit. See, I'm telling you this. The moment you practice it, you will get the control. Okay. At this stage, see now what we are doing. Now we have done a little bit. Second time you are doing, then you will understand. Is that first time you are just understanding, it will be new for us. The moment but when we are doing second time, third time, fourth time, we will not change the rules. That's very, very specific with respect to the process what we are doing. Sale and lease back. If the entity seller, lessee, transferred the assets to other entity, the buyer, and then lease it back from the buyer, the seller, lessee must assess the transfer should be accounted for sale. Very interesting. This is the business point of view. Okay, this is the business point of. Assume you have a asset worth 100,000. Okay, you have an asset worth 100,000. Now see, you don't want this asset. You need this asset only for 2 years. What you will do? You will sell this asset. Whatever the amount, assume you are selling the asset. Assume you are selling the asset to the 100,000 only. Is that you are selling the asset to the 100,000. Now what you will do after selling the asset, you will get it back on lease. When you get it back on lease, what happens? Assume the life of the asset is 10 years. See, very interesting. People will do this. Is that as a finance manager, you will always take things how best you can work it out. You have an asset, you own it. Okay, you will sell this asset for 100,000. Then you will lease it back. When you lease it back, you will get a cash of 100,000. Okay, but when you lease it back, you will give a lease payments of 10,000 per year. Is that per year? How much you will say? Okay, you are going even you are going to say that you are taking the lease for 10 years. Is it right? What happens? You are converting the asset and you are converting it into liquidity. You will get how much? Cash. of 100,000. 100,000 you will invest in another asset, but how much you will pay lease payments every year? You will pay a lease payments of 10,000. This is the business people will do. Is that this is the business people will do? You will create liquidity in your hands. Understand? You create liquidity in your hand. For this purpose, seller must apply IFRS 15, revenue from contracts. Okay, revenue from with the customer decides whether the obligation has been satisfied. Second step, when you are talking about the obligation, it is the step 2. Is it right? It is the step 2. This normally occurs when buyer obtains the control of the asset. You are transferring the control to the other party. Okay, rights will be, ownership will be transferred. Control of the asset refers obtaining substantially all the remaining benefits.
Then why he bought it from beginning?
Why he bought it from?
Beginning. If he want to lease it out again.
Who is leasing out?
Other.
EX is owning. Okay, EX is owning.
He's owning.
Yeah.
He sold the asset for 100. Again he leases it out.
Yeah.
He will lease it again. Yeah, for 1,000 monthly. After 10 years, it will be the same cost 100.
After that, it is the same cost of 100. Okay. Yes.
100. Yes. So why he purchased that asset and again he sold it? Again he leased it.
You are talking about Y, or you are talking about X?
X.
Yes. Okay. You are talking.
So the asset is, yes, the asset is 100,000, right?
Huh.
He sold it to Y with
Yes.
100,000.
Yes.
All right. Then he will lease it again from Y for 10,000 every year.
Okay.
So he will be using it for 10 years.
Okay.
So again, whatever he sold that, okay, the cash which he will have it after the sale, so he will invest it in somewhere else, like this.
Yes.
The concept.
Yes.
All right. The meaning of liquidation like this, huh?
Yes. Understand point?
Okay.
The meaning.
Yes.
See, you are how much you are paying. You are selling the asset. Is it right? You are selling and you will take 100,000. If you say 100,000 at the end of year, every year 10,000, 10,000, 10,000. Is it?
Yeah.
10,000. But what happening? Just imagine you are getting almost 100,000 in cash liquidity.
Yeah.
Now, I will give you this point for your practical training. In the banks, every bank, every other bank, they are investing in properties. Is the branches they are owning the branches?
No.
All the branches are on lease.
Yes.
All the branches are on lease. See, as per the regulator, only the head office should be in your name.
Yeah.
Is that head office should be in your name? Is that all the branches? If you go on, if the bank will own branches and own, is it right? It means they are making investment. If they are making the investment, what will happen? They are closing the cash.
Yes. So there will not be cash.
They will not be cash.
Yeah.
Even if they are having their own branches, assume if they are having the own branches, they will sell it and they will take it on lease. Once they take it on the lease, they will generate revenue and they will pay lease amount.
Yes. Yeah, understood. It's clear.
Is that they will pay lease amount? Okay, good. Ask me. Is that question?
Yeah.
This is what transfer. See what happens. Sale. If the transfer is not a sale, then the sellee continues to recognize the transfer asset and will recognize as a financial liability. It is not a sale. If the transfer is not a sale, then there is nothing, we have to treat it normally as a finance equal to the transfer proceeds. In simple terms, the transfer proceeds are taken as what? Loan. Is that now? You see the thing. You have a same example. You have 10,000. You have not sold. You have transferred. Is it? You have transferred. And what you are doing? You are taking to 100. This will not be treated as sale. This amount will be treated as loan.
Can we say mortgage or something?
Same way, mortgage or loans all are same.
Yeah.
Okay, all are same.
Concept, yeah.
Is it? If you take the broader understanding, all are same. Then it will be treated. See, the detailed treatment of the financial assets and financial liabilities, what we have done will be given here. Okay? Is it clear?
Okay.
If the transfer does not qualify as a sale, if the transfer does not, from then the seller lessee must measure it as a right of use of asset, and the proportion of the same previous carrying amount of the rights to be retained. The initial value of the right of use of asset is what? You have the lease liability divided by sale proceeds. Just 1 minute, okay? You underline this, we will use it, okay? If it is transfer is a sale, if a transfer is a sale, if the transfer does qualify as a sale, then the seller lessee must measure right of use of asset. Is it right of use of asset? If the transfer is a sale, and the proportion of any previous carrying amount that relates to the rights should be retained. It means any value it has been assigned in the previous case, then that has to be considered. Is that what is the, then what in that case, what is the right of use of asset? Lease liability divided by sale proceeds into, we will use, is right? We will use this formula in this section. This means that the seller lessee will recognize profit or loss based on the transfer to the buyer. Definitely, is a transfer is a sale, okay? If a transfer is a sale, what happens? Keep it in mind, just for your understanding. If a transfer is a sale, what will happen? The proportion of the carrying amount, is that the proportion of the carrying amount, and what is the amount of lease return? It is what are the rights has been retained. Is it the proportion of the carrying amount minus the rights retained? This difference will be treated as the right of use of asset. Okay, right of use of asset. Is it fine? Can we do this one before we wind up?
Yeah.
Is it okay, Hussein? Can we do this?
Okay.
Okay.
No
Now,
problem.
1/1/2004. Okay, 1/1/2004. Blank sells an item of equipment to Fume for the fair value. They are selling. Okay, they are selling for how much? 1 million. The equipment has the carrying amount. Is that equipment has a carrying amount of how much? 800,000 before sale. The sale represents the satisfaction of performance obligation as per IFRS 15. Basic enters into a lease contract with Fume for the right to use the equipment for the next 4 years. Is that? They are taking a right to use. Is it right? For the next 4 years. Annual payments are how much? Annual payments are 200,000. Is it? At the end of each year. Is it? And what is the rate of interest? Rate of interest is 9%.
9%.
The present value is how much? 650. The remaining useful life of the machine is much greater than the lease term. Is it? The remaining lease term is only how many years they have taken it for lease? They have taken
4
it
years.
for lease for how many years?
4
4
years.
years. Is it right? Life of the asset is more than 4 years. What they are saying? Explain how it will account in the transaction for January 2004. Fine? Now, okay. What is the formula? Lease liability. Okay, lease liability divided by sale proceeds.
Sale proceeds.
Initial value. Okay, initial value.
1 million.
Is it right? Initial value. Initial value. Lease liability is how much? Lease liability is how much?
Sale, doctor?
Yes, it is there in the question.
Yeah, sale, right? 1 million?
No, initial value. Initial value. Always initial value will be present value.
Alright, yeah.
How
650,000.
How much? 650,000.
650.
Is it right? 650,000. Next, what is the sale proceeds? How much is the sale proceeds?
1 million.
1 million. How much is the sale proceeds? 1 million. Okay.
1 million.
And how much is the previous carrying amount?
800.
Previous carrying amount is how much? 800. Now you will put that into the lease liability. Is that the initial value of the right of use of asset is how much? The initial value, right of use of asset, initial value, right of use of asset. Okay, I will put like this. This is the present value. Is that? This is the lease liability. Is it? This is the lease liability. Is that? This is the lease liability. This is the sale proceeds. This is the previous. How much is there? 650. 650 divided by 1 million times how much? 800. It comes to how much? How much? 650 divided by 1 million times 800.
520,000.
520.
20,000.
520. Are you clear about this?
Yes.
Okay, now what happening? They are talking about the transaction. When they are talking about the transaction, you have to write the general entry. Okay, you have to write the general entry. How much is there? How much you are receiving cash? Sale. Sale means how
Yeah,
much you are receiving, how much? How much
1
you are
million.
receiving cash? Sale is how much you are receiving cash. Debit is cash. Debit what comes in. How much you are receiving cash? You are receiving cash of 1 million.
1 million.
Is that you are receiving? Right of use of asset is how much?
Uh, 520,000.
Right of use of asset is how much? 520,000. Is it? Right of use of asset is how much? 520,000. Now we are cancelling. Is it right? Next, what is the lease liability? Lease liability is how much?
Lease, 650.
650. Okay. Lease liability is how much? Lease liability is credit or debit? Lease liability is credit or debit?
Liability. Credit?
Credit. See, very simple. See the things. See the thing. Keep a T account. Okay. Keep a T account. How much they are receiving cash? They are receiving cash of 1 million. Okay. They are receiving cash of 1 million. They are receiving right of use of asset. Asset increases. Is it right? How much they are getting? 520. Okay. 520. Now, what is the carrying amount is there? Definitely you are selling the asset. Is it right? You are selling the asset. Asset will decrease. Okay. You are selling the asset. Asset value will decrease. Okay. This is nothing but the asset. Okay. Carrying amount. Okay. Carrying amount of the asset. The value will decrease. How much? What is the carrying amount? Carrying amount is 800,000. Is that carrying amount is 8,000? But what happening? The lease liability is also increasing. Is that the lease liability is also increasing? How much is the lease liability? 650,000. Is that lease liability? See, we have taken 650, we have taken 1 million, we have taken 800. Okay, we have taken. How much are right of use as asset? We have taken 520. Have you taken 1, 2, 3, 4? Have you taken this? We have taken this. We have taken
Yes.
1 million. We have taken
Yes.
800. We have taken 520. Okay. Now, is it 1, 2, 3? And what is the carrying amount? This is debit. This is credit. Is that credit is what? Credit is the carrying amount. Carrying amount is how much? Carrying amount is 800. Now, which side is more, which side is less?
Let's check.
Which side is more? This is 1.52. Okay, this is 1.52. 1.520,000. This is 8 plus 6, 14.5. Is it right? This is 1.52. This is 14. This is 1.52. Okay, difference is how much?
Difference is
Difference is how much?
1450.
1450 minus 1520.
Yes.
1450 minus 1520. Difference is how much? It is called as
1450 minus which one, doctor?
This is how much? This is 1450.
Yes.
Is it right? This is 1450. Fine. Now 1520. Difference is how much? Difference is this much. Is it okay?
Yeah.
What is this difference?
One five two zero.
If you tell, I will be more happy. You will tell. I can make you try. You will tell.
What the question, doctor?
You have the, see what you happen, you have sold the asset. Understand point? You have sold
Yes.
the asset. You have sold 800,000 asset. You have sold it to
Okay.
how much? You have sold it to 1 million. Okay?
Okay.
Okay, you have sold. Listen carefully, understand. This is where the subject counts, is it right? 100,000, 1 million asset, 1 million asset. Sorry. It is like this, okay? 800,000 asset. You have sold it for how much? You have sold it
1
for
million.
1 million. Okay? Now you understand the basic concept. Okay? Why people do like this. You have sold it for how much? For 1 million. Okay? Now, what happens? You have a lease liability. How much is the lease liability? Lease liability is 650. Okay? Lease liability is 650. But what happens? What is the value of the asset you are going to get? The value of the asset you are going to get is how much? Right of use of asset is how much? Right of use of
520.
asset is 520. Is it? Right of use of asset is how much? 520. Fine. See, this is the carrying amount. You have sold it for 1 million. This is 650 is the liability. You got liability of 650. Liability is more. Right of use of asset is less. Okay? Right of use of asset is less. Now you lost or you gain. How much you have gained? You have gained how much? 150,000. How much you have paid? You have paid how much? You have how much it has been decreased? 150. Okay. Difference is how much? Difference is 70,000.
70.
It is gain or
Gain.
it is loss for you.
Gain.
Understand? I am asking with all three. All three. Is it right? See, this is the concept of leasing. Is it? This is the concept of leasing. You are selling the asset, you are taking it on the lease back, fine. You will say that yes, I got lease payment of 650, but right of use of asset is only 520. But the difference is how much? Difference is 500. Any difference on the credit side, it will be gain. Any difference on the debit side, debit expenses and losses, credit incomes and gains. Is that credit incomes and gain? Credit will be what? Credit will be profit and loss account. How much is the within brackets? You say it is gain. Is it okay?
Yes.
Is it? Getting the thing? Means now you understand. This is what the lease. I will sell my asset for a higher value. I will take the asset. I will pay for lease payments. Whatever the difference I will get, that I will be treated as a lease. If it has been done like this, they have done with all calculations. Is it right? When the concept is in existence, it means that there is some logic behind this. Is it okay with you?
Yes, doctor.
Okay.
Yeah.
Just revise it. Okay. Just revise it. It new concepts are there. It takes detail understand. Are you okay with this?
Yes.
Now, is it? This is, I will not say this is 20 marks question, but if you take into consideration, we will do next time. Okay, don't worry, we will do. Is that we are talking in terms of IAS 16, we are talking in terms
Please.
of IFRS 16. Is that two things are there? One is this is fine. This we are not talking about income tax. Is that the one we are talking about IAS 16? The one we are talking about IFRS 16. Is it clear?
Yes, doctor.